This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher today. Of course, there were good gains yesterday after the Fed announced that they are continuing to taper their quantitative easing program, and they are leaving their Fed funds target unchanged at 0 to 25 basis points. But for the most part, the statements from the Fed and from Fed Chair Yellen were a bit on the dovish side. Some analysts before the release were thinking there could be a hawkish surprise, especially in light of the consumer price index that did come in a little bit higher than anticipated. So a dovish Fed statement helped stock index futures, with the S&P now advancing to new historical highs yesterday and also today. I would expect further gains in all of the indices, still thinking that the main trend is higher. Over in the currencies, the dovish Fed comments, at least dovish on balance, undermined the US dollar, and all of the other major currencies are trading higher this morning as a direct result. We even have the British pound advancing to a 5-year high, even though we did have UK retail sales coming in on the weak side, although those retail sales were basically in line. So longer term, still looking for lower in the dollar, which did make a 3-week low today, lower in the Japanese yen, and higher in the British pound. Over in the interest rate markets, we are seeing futures following through from yesterday's gains, especially at the long end of the curve. And we are getting very close to the top of the congestion pattern that we have formed over the last 3 weeks in the 30-year bonds. Ultimately, though, I think we will break out to the upside. Nothing changing in our long-term view. Still thinking that the main trend is higher. Still thinking that the 30-year bonds will be the leader to the upside. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.